Chainlink, Link, one of the most critical pieces of infrastructure in crypto. From its role as the backbone of DeFi and cross-chain interoperability to its explosive price action potential, we'll break down everything you need to know. We'll cover price predictions based on Elliott wave analysis, the latest fundamental and macroeconomic drivers, and why Link could be setting up for one of its strongest bull cycles yet. Link Price Prediction 2025 based on Elliott wave technical analysis. Based on the Elliott wave structure, Link appears to be in the early stages of a major impulsive wave higher. The chart shows that Wave 1 has already broken above long-term resistance, with a corrective Wave 2 currently retesting lower Fibonacci levels for consolidation. Historically, this type of pullback provides the springboard for Wave 3, which is usually the strongest and most extended move in Elliott wave theory. Key Fibonacci retracement levels for Wave 2 are clustered around $19.37, 38.2%, $17.34, 50%, and $15.53, 61.8%. If Link holds above these zones, it would confirm the base building necessary for a strong continuation higher. Failure to hold could see deeper support tests near $13.27, though the broader wave structure remains bullish as long as the macro higher-low trend is intact. On the upside, Wave 3 targets are projected in the $47 to $68 range for the initial extension, with further potential toward $85, $122, and even $158 to $220 at the cycle peak. These levels align with historical capital rotation patterns where Link has shown parabolic rallies once Bitcoin dominance begins to ease and liquidity rotates into altcoins. In the near term, Link is trading around $23, pressing against a long-term descending trend line. A confirmed breakout above $27 would act as a major technical trigger, unlocking the path toward the $47 to $68 range. This coincides with multiple catalysts in play, including Chainlink's CCIP expansion, staking version 0.2 rollout, and improving macro liquidity as the market anticipates Fed rate cuts later in the year. From a trading perspective, this Elliott wave outlook suggests Link is entering the early innings of a multi-month bullish cycle. In the next 1 to 3 months, upside toward $27 to $37 is realistic once resistance is cleared. Over the 1 to 3 year horizon, the structure supports a long-term bull case with Link potentially reaching $100 plus as the full Wave 3 cycle unfolds and institutional adoption of Chainlink's Oracle and interoperability solutions accelerates. Fundamental and on-chain analysis. Chainlink remains the dominant Oracle network in the blockchain space, underpinning critical infrastructure for DeFi protocols, RWAs, and cross-chain applications. The network has seen steady growth in adoption, with integrations now spanning over 1,000 projects across DeFi, gaming, and institutional pilots. Daily active addresses have expanded gradually, with consistent transaction flow tied to Oracle feeds and, more recently, CCIP, cross-chain interoperability protocol, adoption. TVL attribution is harder to measure since Chainlink provides data services rather than hosting liquidity directly, but the breadth of integrations indicates systemic importance. On tokenomics, Link has a capped supply of 1 billion tokens, with no inflationary emissions. The long-term model is deflationary in nature, as staking and service payments lock up tokens while new demand comes from protocol adoption. The Chainlink Economics 2.0 roadmap envisions service providers being paid in Link, creating a closed-loop value accrual system. Link trades at a premium valuation given its dominance, but this is justified by network effects. Will Link have competitors? The bull case for Chainlink rests on 3 core pillars. First, its Oracle monopoly. Chainlink remains the undisputed leader in decentralized data feeds, securing tens of billions in smart contract value and providing infrastructure for almost every major DeFi protocol. Second, the expansion into CCIP positions Link not just as a data oracle but as the backbone of cross-chain communication, a $1 trillion opportunity if institutional and RWA integrations expand. Third, its staking upgrades and tokenomics ensure that demand for Link increases as more projects rely on Chainlink services, creating a sustainable economic loop. The risks to this thesis include rising competition from alternative Oracle providers such as API3 and Pyth, which could gradually eat into Chainlink's market share. Both Chainlink and Pyth are in the Oracle space, meaning they both bring off-chain data, like asset prices, onto blockchains where smart contracts can use it. But their focus and positioning differ. Chainlink, broad Oracle infrastructure plus interoperability layer. Not just price feeds, but also cross-chain interoperability protocol, CCIP, proof of reserves, randomness, VRF, automation keepers, and growing partnerships with governments and enterprises. It's building the AWS of Web3. Pyth, focused almost entirely on high-frequency price feeds. It's optimized for trading apps, derivatives, DeFi protocols that need millisecond-level updates, e.g., perpetual DEXs like Synthetix, DYDX, or Drift. It doesn't yet offer the wider suite of services Chainlink provides. Same but different. Pyth is a competitor to Chainlink in price feeds, but it's not a full rival in the bigger Oracle/interoperability space. Chainlink is still miles ahead in adoption and scope, while Pyth is carving out the high-frequency data niche. Another risk lies in regulatory oversight, particularly if tokenized data services or staking yields fall under securities scrutiny. Overall, the verdict is bullish, supported by Chainlink's entrenched moat, new product rollouts, and expanding adoption curve across both retail DeFi and institutional finance. Sector and macro view. Chainlink is like the invisible infrastructure provider that everyone depends on, but no one can easily replace. It already has the most integrations, the strongest network, and the most proven reliability, making it a safer long-term bet than newer Oracle projects trying to catch up. Chainlink is not like Ethereum or Avalanche, which are Layer 1 blockchains where people build apps directly. Instead, Chainlink connects all these blockchains to the outside world. Think of it as the middleware layer, the invisible infrastructure that makes everything work smoothly. Without Chainlink, most DeFi, decentralized finance, apps wouldn't be able to do basic things like check real-world prices or talk to other blockchains. For example, imagine a DeFi lending app that lets you borrow USDT by putting up ETH as collateral. The app needs to know the real-time price of ETH in dollars to decide how much you can safely borrow. If it guesses wrong, the whole system can collapse. Chainlink solves this problem by acting as the oracle. It fetches real, reliable price data from multiple sources and feeds it securely into the blockchain. In the same way, if a bank wants to put a bond or stock on-chain, called an RWA, or real-world asset, Chainlink can provide the pricing and settlement data to make it work. On a bigger scale, Chainlink also has a system called CCIP, Cross-Chain Interoperability Protocol. This lets different blockchains talk to each other. Now, why is this important for investors? Because when the US Federal Reserve starts cutting interest rates and more money flows back into risk assets like crypto, DeFi is likely to grow again. Whenever DeFi grows, Chainlink grows automatically, since nearly all DeFi apps rely on it. And history shows that after Bitcoin, BTC, has its big move at the start of a bull run, traders usually rotate into high-quality altcoins like Link. Since Chainlink already has the trust of developers, institutions, and DeFi projects, it's in a unique position to benefit more than smaller competitors. Catalyst watch. Chainlink's momentum is being propelled by several tangible developments. In July 2025, the network rolled out price feed integrations to new chains, expanding critical data coverage essential for DeFi apps such as lending platforms and derivatives markets. Around the same time, the Etherlink testnet deployed CCIP support, enabling secure cross-chain messaging for Ethereum Layer 2 networks. Perhaps most significant, the CCIP version 1.5 upgrade went live on mainnet, ushering in self-serve token integrations across more than 20 blockchains and simplifying developers' ability to deploy cross-chain tokens, CCTs, without modifying existing contracts. On the macro front, markets are pricing in a high chance 87% of the US Federal Reserve implementing a 25 BP rate cut, expected to boost liquidity and risk appetite, including in crypto asset classes like Link. Indeed, Chainlink-related funds have seen renewed inflows, rising to $7.7 million month-to-date, which brings its year-to-date total to over $33 million, with total AUM of $137 million. These flows, combined with the technical price structure forming bullish patterns like inverse head and shoulders aiming toward $30.80, suggest growing speculative momentum. Long-term, 1 to 3 years. Chainlink continues to build on institutional traction and regulatory alignment. In 2025, it received ISO 27001 and SOC 2 Type 1 certifications, enhancing trust among enterprises and institutional users. Simultaneously, the U.S. Department of Commerce partnered with Chainlink to publish macroeconomic indicators, GDP, consumption data on-chain, a strong signal of financial infrastructure integration. Other strategic alliances include collaborations with MasterCard, enabling on-chain crypto purchases via payment cards, ICE, streaming FX and precious metals data via Chainlink data streams, plus SBI holdings in Asia-Pacific for RWA, proof of reserve, and cross-chain deployments. Chainlink is positioned not just as another altcoin, but as the data and interoperability layer of the entire blockchain economy. With catalysts like CCIP expansion, staking version 0.2, and macro tailwinds such as Fed rate cuts fueling liquidity, Link could be on the verge of a powerful breakout. Whether you're here for the short-term trade setups or the long-term 5 to 10-year investment case, the outlook remains compelling. If you found this analysis valuable, don't forget to like, subscribe, and hit the notification bell so you don't miss our next deep dive into the most important crypto assets of this bull cycle.